Hello and welcome to BQ Prime. You're watching IPO Adda, and the company in focus today is Kabel. It's a company based out of northern and western India, and it produces wires and cables, and it's into the FMEG business. The company is coming out with an IPO on September 13th. The IPO closes on 15th of September with a price band of 933 and 1035. It's an issue which comprises of 180 crores of fresh issue and 1784 crores of OFS, primarily exit for private equity player TPG. The total size of the IPO is 1964 crores and the company is valued at 11,513 crores. And joining me today is Mr. Shreegopal Kabra, who is the managing director of the company, and Mr. Rajesh Jain, who is the chief financial officer of the company. Gentlemen, thank you for joining us on BQ Prime today. Let me ask you by starting off, you're raising 180 odd crores. It's a business which requires a lot of cash, especially with respect to the expansion. How do you, is the 180 crores sufficient for you, and what are you using the 180 crores for?
So this 180 crore primarily will be used to repay our term loan and working capital facilities for other capex, and we have sufficient internal cash flow also.
Okay. Give me a sense of, sir, how is your operation based out of, and what kind of product profile that you have?
Basically, we have two factories for wire and cable. One at Waghodia, which is near Baroda, and one at Silvassa. These are two major factories we have. For electrical FMEG business, we got company we bought it from Luminous. They got factory in Gagrit in Himachal Pradesh, and we had a Roorkee where we make a lighting and fan. And for commercial lighting, we have factory at Bangalore. But our major base is in Baroda and Silvassa, where we make wire and cable.
Sir, you're getting into business which is very hyper competitive business, especially wires and cables. You have lots of branded players as well in this market, as well as unbranded players which are there in this market. How do you see this market growing? You've been growing at a good 27 odd percent in top line from FY22 to FY23. But how do you see the growth going forward?
See, growth as per industry report also, if you look into, then it's going to be 13 to 14% minimum. But we as a company, we are looking for 20% growth. I can tell you that there is going to be huge demand for wire and cable, not only India, but globally. Because everything is shifting now from the right, for example, to power, from fossil fuel to green. There are a lot of new opportunities are coming, like data center, new warehousing. And as we know, the real estate is doing very well. So it may be in somebody's mind that currently see real estate is doing very well. But then what is the cycling? But no cycle, but then we need to understand in real estate also almost hardly 40% wire and cable goes for the new project, but 60% is going into renovation. So renovation, redevelopment is going to be a game changer, and the aspiration level of Indians now today is very high. Like say previously when people used to buy flat at the age of 52, 55, and now today people are buying at the age of 37. This is going to be further come down. So kind of Indian middle class is growing, and the way our economy is growing and urbanization is happening, the changes there going to be huge demand for a wire cable. Whatever new things because of the electrical mobile, electrical car vehicle. Now when EV charging starts, so all the buildings which are commercial buildings are there, big residential complex are there. They will have to change entire cabling also. And in data center especially, because we all know that in data center investment is coming almost more than $100 billion, and there are maximum requirements of electrical wire and cable.
Give me a sense of your production facilities are based out of north and western region. Where does your revenue breakup comes from? Is it the north and western region, or it's the south and east also constitutes a good amount of revenue for you, Mr. Jain?
So yeah, so we are spread all over the India, and also 25% of our revenue comes from export as well. And we are very strong in west and north, and now we are also developing market in south and east.
And when do you see significant additions of distributorship or selling points coming up? Is there a target that you have? How are you expanding in these regions so that you can have more footprint in this region?
See, basically, as when we started company, so 23 years before we started, because we are the youngest company in this sector. We started from one state, then two state. By 2019, almost we were very strong in 6 states. And after between 2019 and 2023, now almost 11 states are a winning state. We call as a winning state as a company where our market share is about 9% and above. So then we call winning state. And then we got further more areas where we are developing focus. Like we are now focusing in East. In South, we are strong in Kerala and Tamil Nadu too. So we have TN, we divided two, TN1, TN2. So Pondicherry, Chennai is separate. The other area they are strong. So now we are focusing into Andhra, Telangana, Karnataka and East. That's the major area which we are focusing to increase our volume.
Mr. Jain, come in here on the EBITDA growth because I was looking at your EBITDA growth. The growth has been not in sync with the growth which the top line has seen. Top line saw only 27%, but EBITDA growth, has not been. It's around 6.5%. Is there a pressure of raw material prices that's impacting your growth there?
So we are doing very good in terms of volume growth as well as profitability also, and we are expanding our footprints all over the India. So when we are in growth phase, so we have very high advertising and sales promotion expenses. We have very focused approach how to spread our markets, and we are doing very well with industry norms.
Okay, so at nearly if I look at the EBITDA margins around 6%, what is the kind of range that you see where you can expand your EBITDA margins going forward?
No, we cannot make any forward.
But what is the industry working on?
No, so industry is like also doing in the range of 8 to 9%, 10%, and we are doing as per our business strategy. We are doing as per our planning only.
So, do you see enough upside for your margins to go up from here?
Yeah. If you see our sales plan, the sales spread product strategy, so we are working on our plan, which is in line with our future profitability plan or expansion plan.
Okay. You had borrowings of nearly 777 crores as of August. At the end of June, it was around 403 crores or so. Where is that expenditure coming in from? Are you putting in more capex plan? What is the kind of plans that you have?
So this what facility is borrowing is mainly comprises of working capital facilities only. And if you see the volumes of my first quarter, it has risen. So my net working capital days have reduced only, and currently at June 23, it is 64 days against 74 days in December 22. So we are improving our working capital facility also. It is only the expansion of business which is going on. That's why working capital in terms of value has been increased.
We've seen interest rates as a whole in the economy going up. What has been the impact on you because your business is dependent on working capital, so there will be an increase in interest cost which is coming in because of that. What has been the impact of that?
So interest cost is ultimately part of your business only, and since this is have global impact or national impact, so we are not apart from that. But if you see, we are not that much working capital heavy industry, and it is like at par or at normal level only. So we'll do however this industry behave in that line only.
But do you have a capex plan in place? To increase further capacities?
Yes, we have a capex plan.
What is the kind of plan that you have?
As we are growing, if you see my capacity utilization and as this industry grow, we have also planned our capex in the line to meet the future demand. Whatever, as my industry will grow, we will definitely do the capex also to meet the consumer demand.
Nearly 1/4 of your sales comes from overseas. You mentioned as well that you have a good export market there. Give me a sense of what kind of products did you export and what kind of margins that you see from those export markets.
Basically, our journey is from wire to cable. So initially we started exporting from wire, and now we are moving to cable. And the best part of our export is that our 92% export we do to all the developed world. And we are the only company that we got 35 international approval for our cable category, and 90% we sell in our own name. So our maximum export is to all developed world where the rules and regulations are very strict, where the quality conscious country and developed world we are doing.
I'm talking from a margin point of view. Does exports give you better margins than domestic market?
No, in few item yes, few item no.
So both are different market, both are different type of market. So product strategy, margin strategy are different for both the markets.
Your entry into fast moving electrical goods, you bought a couple of you did couple of M&A in the last 2 to 3 years as part of a strategy. How is that growing, and what do you plan, what is the plan for those for that, especially fans, lights and other other products in this FMEG group?
See, basically, we acquired two companies. One is Aristom in Bangalore, which is for commercial lighting, and that company, this is growing very well. And last year, we bought a lumination from Snyder, and that company also we turned around to growth in very first year.
Okay.
And we have future plan. Yeah, means FMEG our growth rate is doing very well. Yeah, and now previously we had only just economy category. Now we have a premium economy and economy, both the range available with us. Yeah.
And how do you go about manufacturing and this product? Because what I read was that you have need over 25 OEMs who supply you these products. So these are third party contractors who are doing that, and you are selling it forward, right?
No, see, basically, our plan and strategy is that a ceiling fan we will manufacture ourselves right now, which we are doing it. And for commercial lighting, we are manufacturing ourselves in Bangalore. And in terms of the three product category like bulb, batten, and downlight. So now India is also changing. Now we got a good ODM companies are available, so that we'll be outsourcing from them three categories, especially in the rest. We will keep on changing our strategy as per market demand, as per how much the best deal we can get or innovation require investment, accordingly we'll plan. So it will be both buying outsourced and manufacturing, both strategy will be there together.
Okay, but do you have a plan for this FMCG? Because many of the peers have also started, who are into wires and cables, have also trying to go into this sector, because that's a value add product which is there and gives you better margins as well. So how do you look at this sector? And currently a large part of your revenue comes from wires and cables. Where do you see this FMEG segment for as part of your overall strategy?
See, FMEG will grow. See, basically, like they are going FMEG much more faster because we are late in trend. In wire and cable also we are going faster, and FMEG also we are going faster. So we'll grow FMEG also faster, and FMEG is going to be a core business. Unlike not wire and cable, the ratio will be wire and cable always be much bigger. Even also as an electrical category whole, the category which we are, the wire cable plays a vital role. But FMEG is very focused product because we want to be the product which is behind the wall and outside the wall, both together.
Just a question on one of your key investors is exiting this, TPG exiting the company. How much will it be holding post the exit? And do you plan to, is there a need for you to raise further capital going forward because of, working capital needs and others?
No, we will not require any further capital because we will be, what is the expansion of that will be sufficed by our internal accruals and the growth plan we have. And TPG will hold, your question, that they will be holding between 5 to 6%.
Okay. Give me a sense of what is the kind of cash flow, free cash flow that you can generate from this business on an annual basis, and how you plan to use that cash flow as well.
So majority of our cash flow will be used for like expansion and paying back to our shareholders and growth of the business. And we have very good positive cash flow company. If you see our track record, we have done very well in terms of working capital arrangement, cash flow generation, and this will be used for company growth only.
When you say you will be giving it to your, to the shareholders as well, is there a fixed dividend policy that you have in place? How do you plan to give it back to your shareholders?
Oh, our dividend will be decided by board only.
But is there a policy that is in place?
No, see, sir, but ultimately it's in the hand of the board. Yeah.
Okay, because I'm asking that because you said that you'll use the cash flows to give it back to the shareholders. So I wanted to know how do you plan to give it back to the shareholders?
No, see, it's always it's a debatable and it's a question keep on changing. That it's a board will decide. Depends on what the business strategy. You can't tell how what we will be doing there for next 3 years, 4 years, how much the dividend will be giving. It nobody can decide because it's not in the hand of either I am MD or he is CFO, but ultimately the board decide.
Okay, sir. What I saw from the thing that you have a good amount of receivables which are coming in and it's increasing every year as your revenues. How do you planning to reduce the receivables?
So we are already introduced channel financing facilities, and as of now, my average receivable days are 37 days, which is like normal credit terms in this business are 45 to 60 days. And with the use of channel financing facility, we have brought down to 37 days.
Okay, and how does this channel finance facility comes in? Because I understand that you are giving bank guarantees for this channel finance to your vendors or clients. So how do you do? How does it work actually?
So our majority of the channel financing facilities are on non-recourse basis. Only few of them are backed by bank by guarantee by the company. But it works very well because it is win-win situation for my debtors as well as for the company to have more disciplined cash inflows.
And how do you decide on that? Do you do that for all your distributors and retailers, or is it only certain areas or certain markets that you look at?
No, so it is majorly decided by the bankers or trade facility givers based on their relation with company, based on their track record as well.
One of the biggest raw material for you is the metal prices, aluminum and copper. How do you see prices going forward? And is there a way of hedging these prices at your end?
No, so see, nobody can predict how metal prices will behave in future or how it will behave. But see, the more importantly, what is my business mechanism? Am I able to pass on the prices to my consumer? If you see this industry, wire and cable, like for us, whenever there is like price movement by positive plus or minus 3%, we change our price also. So there is a little bit time lag, but otherwise we are able to pass on the prices to our consumers in very systematic manners.
And this lag is how much actually? Means if a price hike happens in a quarter, when do you come out with the price revision, and how much time does it take for you to push it to the market?
So see, you have to see the average of last 15, 20 days. Like overnight, we cannot change the prices, but if the on average, so there is not fixed price every quarter, every month. Like if there are price change of movement of 3% within 15 days, we change the price. If there is no change for 2 months, then we do not change the price. So it is based on the movement of metal prices or raw material prices. If it is plus or minus 3%, then we change the prices.
In your profits, I saw that there is a deferred tax write back also which has come in, and as a result of the profits have gone up. Where is this coming in from? Can you give us some idea on that?
So deferred tax is just the function of tax, what like earlier I have provided, or the time gap between depreciation of IT depreciation and my company law depreciation. So this is as per company law and taxation rule only. So there is nothing to do with my business.
No, because it's adding to your profit after tax. So that's the
So-
reason I'm asking.
So this is just my earlier we have made higher provisions based on that time taxation law, and this is natural way of by following the tax law.
Have you looked at means what is the kind of deferred tax available in your books going forward? Are we going to see that in subsequent quarters as well?
No, but this will be like as per tax calculation only. So like whenever there will be higher tax in as per income tax and lower tax in as per company law, there will be return back of deferred tax also in future.
My final question to you, sir. You're into a industry wires and cables which is very competitive. How do you place yourself vis-a-vis your competitors?
See, we have the two things. Means in terms of quality, we are number one, and then we say again. I would repeat that we are the only company that we got certified international approval for single factory. This is the biggest achievement. And in terms of like, we are the only company in India which is 100% REACH compliance, 100% ROHS compliance. Our focus is too much on sustainability and kind of people respect for our quality in the market. And every now and then we are increasing our range in the wire and cable category because we start from wire a small category, so it is now cable, and we keep on growing on the range.
Gentlemen, it was a pleasure talking to you today. Thank you very much for joining us on BQ Prime on IPO Adda. That was
Thank you.
RR Cable Management. The IPO opens on September 13th, price between 983 and 1035. It's a fresh issue of 180 crores and OFS of 1784 crores. Thank you for watching BQ Prime.